In this video, we will hear from economist, American lawyer, investment banker, speaker, and best-selling author, Jim Rickards, American entrepreneur, best-selling author, and founder of Global LLC and Rich Dad Company, Robert Kiyosaki. Andy Schectman has been a prominent figure in the financial services and precious metals industry for more than 25 years.
Now, the reason I like gold and silver is because when you study money, what the dollar is always called counterparty risk to it. A stock has counterparty risk to it. All money has counterparty risk. That means you got to trust somebody else. Like the counterparty risk of the dollar, the US dollar or any money, the yen or the peso, is you have to trust your government. If you trust your government, knock yourself out, man. Save all the money you can as a screw you.
Most people don't see what's coming. They can't get out of the way of it. If you have the ability to own some precious metals, do so, because as Robert said, it is an asset that is not simultaneously someone else's liability. The concept of counterparty risk is something that's going to become more and more and more entrenched in people's psyche as we see more and more banks fail, and what it means to be involved in an asset or in an instrument that contains counterparty risk. Because if a counterparty fails, what does that mean to you and the asset that you hold that is valued upon the counterparty's ability to perform? Not so good. So removal of counterparty risk, removal of variable rate debt, removal from the system, best you can, is where you start.
I simply don't trust my government, and I don't trust the Fed, I don't trust the banks, and I don't trust Wall Street. So it's pretty simple philosophy. In other words, what I say, if you can print it, I don't want it. So if you can print the dollar, I don't want it. You can print a stock, I don't want it. I want something I can see, touch, and feel, or like our friend Jim Rickards says, what's real?
As far as what I call paper gold, people buy gold futures on the COMEX. They'll buy unallocated gold forwards from banks who are members of the London Bullion Market Association. They buy gold ETFs. They buy shares in gold funds, etc. And they go, I've got gold. And I say, no, you don't. You have a contract. And let's see how the contract is honored. So what would happen if all the people who were long futures stood for delivery? And that there's a procedure for that, which is, you just put in notice, say, you know what, I don't want to roll over my contract. I don't want to pair it off or buy it back. Just send me the gold. And you can do that. And they've always allowed that because they want to maintain the basis between the physical and the paper gold prices. But if the open interest is 100 times the physical gold and everyone wants this gold, are you going to get your gold? The answer, of course, is no. And so they have a rule. I'm actually enough of a geek. I've read all these rule books of all the exchanges. I'm a lawyer, by the way. So there's a big part of my career was kind of regulatory practice. Every major exchange has a rule that says they can change the rules. And so when they do that, everyone whines, oh, you changed the rules. Like, well, no, we didn't. We have a rule that says we can change the rules. Get ready. When the demand for delivery overwhelms the amount of physical gold, they issue an order that says you can trade for liquidation only. What that means is that if you're long, you can sell and close out your contract and collect your winnings, or you can roll it over to a future month, but you can't get the gold. You can't get the physical gold. And that will, kind of save the exchange. But you're sitting there saying, well, no, I want my gold. This is why I did this. But they are going to deprive you of the opportunity to get your hands on gold. And the exchanges all say, we are not a source of supply. We only allow a limited amount of physical delivery to maintain the basis, but we're not a source of supply.
Gold's track record is clear, and so is the US dollars. Fiat currencies have come and gone, but all the while, gold and precious metals have stood the test of time. Get started protecting your retirement savings today. See the links in the video description to get access to the free gold investment guides from the Best Gold IRA and gold investment companies that we have personally researched and vetted. You have nothing to lose, but you have wealth to keep. Thank you for watching.